Hey, welcome back to this channel, and today we're going to talk about the stock market terms, and we're going to split this one in two parts. Today we're going to talk just about the basics, and this is going to be part one, and then in the next video we're going to talk about we're going to delve deeper into different terminologies, and that will be part two. Hi, my name is Stefan, and in this channel we talk all about investing, and we give you all the information to start investing or even just be a better investor. We're also on a journey to reach 10,000 subscribers before the end of the year, and so jump on board and let's get as many subscribers as we can so that we can get this to as many people as possible. So the first one we want to talk about is stock market. What is a stock market? Now, if you're new to this channel, you know that we talk all about investing, but you know there are many different ways that you can invest. So this one is just going to be on the stock market itself. So the stock market is it's regular activities of buying and selling of and issuing of shares in the public held companies. Now you get private companies and public held companies. Public held companies are easier to buy and sell because it's easier to understand what's the value of the company. I'll get to that a little bit later. Now, that is just a stock market. It's almost like your local market where you go buy fish or where you go buy vegetables. It's pretty much the same. This is just to buy and sell companies. What is a share? A share is literally just a piece of a company that they put on the market. So to give you an example, we have public companies that take the shares on the stock market, and then you have private companies like your laundromat or your candy store or just your convenience store. Now that company, that private company, the convenience store, has one share. If it has one owner, it's got one share. So you literally have to buy the whole company. If he wants to buy, if he has a partner, then it's 50-50 partners, but that means there is two shares. So because two people own it. Where certain companies like Coca-Cola, you'll see now they have 4.2 billion shares out. So yeah, literally there are 4.2 pieces of that company, 4.2 billion pieces of that company. So that is just a share, is a piece of a company. Now, to get onto the public market, you need IPO. It stands for initial public offering. Now, to get into the IPO, you can make a video just on how to get onto the stock market, but if you hear IPO, that just means initial public offering. Every company needs to go through this to get onto the stock market. Now, shares outstanding, if you ever heard about shares outstanding and float, what is the difference about this? Shares outstanding just means the total amount of shares that this company has available everywhere. On all stock markets. And then the float means how many shares are out there that people can buy and sell and trade, because shares outstanding sometimes have like special shares that is issued to workers, issued like warrants. You don't need to know what that is right now, but that just means some of those shares you can't buy and sell. The float is the shares that's on the market that you can buy and sell. Remember the shares outstanding, because we will come back to that a little bit later, and I'll explain a little bit more about shares outstanding. So that's number 4. Number 5 is bull and bear market. If you ever heard about a bull or bear market, that just means bulls just means the stock market is going up, and bears just mean the stock market is going down. This comes from a long time ago, but I love the terminology that they use with the stock market going up and down. If you've learned something so far on this video, go ahead and like it. It will help us to get it to as many people as we can, and it doesn't cost anything. Also, if you stick the video so far, well done, because you are on the road to become financially independent for sure, because I guess this is just part of a financial education, because we didn't get it in school, so you have to do it by yourself. Yes, it takes some work, but it's the most fun thing, most enjoyable journey that you will ever go on, is to be financially independent and to get a financial education. So well done on you. Number 6 is broker or brokerage account. So what is a broker? Back in the days before internet was really accessible to everybody, a broker was just somebody in an office that you would go to and say, listen, I want to buy a share or a stock or equity of this company. And he will say, okay, that's fine, let's open up a brokerage account for you and let me buy it for you because I'm registered to go to the market and buy it for you. So a broker is a registered a stockbroker is a registered person to buy and sell stocks. Nowadays, online brokerage account you can open yourself, and you can basically trade and sell and buy stocks without a specific license, and it's going to cost you sometimes zero commission to do that. Obviously, nothing is free in this world, but it's zero commission. These are just some sort of stock brokers that you can use. I have myself interactive brokers account. I have a First Trade account. I have a TD Ameritrade account. Think or Swim goes with TD Ameritrade account. Some of my other videos you can see how to open up a TD Ameritrade account. So yeah, that is just a brokerage account. Number 7 is ticker symbol. What is a ticker symbol? That is literally the symbol that you trade on the stock market for that company. Now normally you don't go look for Apple, or you don't look for the name Microsoft. You look MSFT, AAPL. That is the ticker symbol for Apple. On Hong Kong stock market you get numbers. They work in numbers. They don't work in ticker symbols. And the same with Japan, they also work in numbers. I don't know why, but it's just different. Obviously they probably don't want to be like America. And then what is an index? This is number 8. An index is simply just a basket of companies that is combined into one index. So if you've ever heard of, they say, oh, the stock market is going up, the stock market is going down, they're talking about a index like the S&P 500 on American stock. That stands for Standard and Poor. Standard and Poor means it's just the two people that invented this. It takes the 500 top companies in America and basket it together, and you get the S&P 500. So basically it's America by itself. The DJI is Dow Jones Industrial. That is the top 30 companies in America, or the biggest 30 companies in America. The Nasdaq is mostly for tech stocks, like some of these S&P 500 and Dow Jones companies are on the Nasdaq, but that is just another index that tracks the tech stocks in America. Then we have the Russell 2000. That is 2000 companies that tracks mostly medium to small companies. That's why it's known as the Russell 2000. It's a little bit different, but it's another type of index. Okay, number 9 is portfolio. Portfolio is just your stocks that you have, all your investments that you have. That is your portfolio. Now you get different assets in your portfolio. You can get commodities like gold, silver. I did a video about that as well. You can have real estate, you can have stocks, you can have bonds that's issued through a company or the government. Don't worry about that, but that's just different assets that you can have in your portfolio. So if you hear about portfolio, that is what that is. Number 10 is market cap. If you heard about market cap, it's a formula where you take the shares outstanding. Where do you get the shares outstanding? You go to Yahoo Finance. Very easy. So let me just show you where to get the market cap. The market cap, you just go to summary, Yahoo Finance, you type in there any company that you want. You just look up there the company. Then you go down and you see the market cap is $229 billion for Coca-Cola. And how do we get the market cap? We take the share price, it's 53.19, and we multiply. Where's my thing? We multiply that by the shares outstanding, the total amount of shares that's available of this company in the world. So we take that and we get the market cap of the company, and obviously they fluctuate as the stock price go up and down, and that is why it's much easier and to buy and sell a public company on the stock market, and it's very hard to buy and sell a private company because you don't know what's the value of that laundromat on the corner, but you can easily see the value of the publicly traded company because you can get the market cap very easily. And that's why you also sometimes pay a little bit more for a publicly traded company, because it's so easier to do that. Um, if you stick so far, well done. This is just a breakdown, just a reminder of all the things that we covered so far. This is the 10. In the next video we will do, I don't know how many yet, but we will do on part 2, we will go deeper into different terminologies. I hope this helped you so far. Don't forget to like, subscribe down below, and I'll see you in the next video. And for now, enjoy your day. Bye bye.